All right, nice to have you guys here. Super excited. It's an amazing Monday afternoon, my time. So, good afternoon, good evening, good morning, whatever part of the world you might be joining us from. You guys are welcome. So, let's get started. All right, so today, just as the name already implies, backtest price action with me. So, it's just going to be like me backtesting on my screen, and then you guys just follow. Then I look at the things that make me that inform my decision to either buy or sell at any point in time. So while I'm just getting ready to do that, drop your location where you're joining us from in the comment section, just as we always do here. All right. So I know we have every now and then when we check at the back office and check the statistics of people that join in, we have always more than people from 160 countries joining us every now and then in the live stream, according to YouTube. All right. So what we are going to try to do is as much as possible to keep it at a lower pace, and we also understand that so many people join us are speaking Spanish, and some others are speaking Portuguese, Mandarin, and so on and so forth, and some French. Not everybody that speaks English. So with that help, I think you guys can just click on the translate button that is in YouTube here so that that can be translated. And if you also want to have this transcribed rather in English, you can also click that transcription button and you have it transcribed in English and then you follow suit if maybe my accent is not so clear to you. All right, good. So we have people from Calabar, we have people from Abuja, people from Uganda, from Ivory Coast. You see what I'm saying? These are the French-speaking countries like that. The list keep going on and on. We have someone from India, Nathan. Nice to have you guys here. Okay, so with all these things said, without further ado, let me just set up my chart and then we can start. Cameroon, from Botswana, wow, Lesotho, Guagualada, Benin Republic, Botswana, England, VI, Cameroon. We have people from all over the world joining. So I respect you guys. Thank you for joining here. Thank you. India, Abuja, yeah, Jos to the world. Someone just said Jos. So we now have a lot of traders coming from Jos because everybody have heard Sham's story, how Shams has been killing it and making the Jos people from the northern side of Nigeria so proud. And you saw the US 30 signal he dropped in the group today. If you're not a part of our signal group yet, make sure you click the link in the description box or click the link in the comment section so you can be a part of that. So whenever we are buying and we are making profit, you should be making profit. It's your right to be making profit with us as too. All right. So make sure you're making profit with us. If you're not doing that already, click that link right now and then let's go. All right. So let's set things up and I just want to show you guys how I set up my screen, everything from A to Z. So let's get started. So let's say we want to use TradingView. Just so you guys know, TradingView is not the only platform you can use right now to do charting. There's a new platform by my mentees they discovered you can use to do this TradingView replay, to do charts, chart analysis, and all of that. There are new platforms. Yeah. If you're not aware of that, you better be joining my team because that's where you get to know how all these things work. So now all you just have to do when you come to tradingview.com, that since TradingView is the commonest one, come to tradingview.com and you want to click on product and click on charts. When you do that, the screen is just going to load up and then it's going to bring a default pair based on the one you left off of for now. So for me, I left here with GBPUSD so that it's open with GBPUSD. So you can just click on this to adjust to any currency pair that you have. But the default currency pair or instrument you usually would see here is AAPL. That's Apple stock. So what you can just do is just click on it, change it out to any currency pair, maybe cryptocurrency, futures, funds, forex, indices, bonds, or any economy or stocks that you want to trade. But for this class, we're going to be doing back testing. This is how I do back testing, and this is how I think you guys should be doing same too. So you're just going to be doing back testing based off price action. All right. And all right, we're just going to be doing back testing based off price action, and it's pretty simple. So I'm just going to go on with let's try with 8 cap Great British USD by Great Cap. All right. And then we're going to clear out all these drawings and then we start afresh. Just going to start afresh. I want to be a clear chart so you can do back testing. This is how I just do my back test anytime, any day. All right. Okay. So your chart should just be like this when you clear out all the indicators and everything. Like this chart is not properly loaded. Let me reload. Okay, good. Reset back to FSCM. Let's take it back to 8 cap. So by just merely looking at this market, if you must trade today's market condition, please you had better be longing because price is tilting towards the buy. So we still have more people dropping their location. We have China, we have someone from Rivers, someone from Zambia, someone from Anambra, Landmark University, Ghana, and UK. Where else? Where else? Where else? Okay, so let's go. Botswana, Zambia, Dubai, Lesotho, Benin, Vietnam, Uganda, a lot. So nice, 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 nice. So let's go ahead. Let's get started with I should call your name from okay, Lincoln from Kenya. Okay. UAE, Dubai, live, Benjamin Ryan. Nice. We also have people from Australia. Bielsa. Thought I saw Australia a while ago. That's already missing because of the comments. We have people from Malawi, Australia, Syria from Australia. All right, so just pay attention to the chat, guys. Just pay attention. Let's go ahead. Let's get started. Let's get started with this back test. So one thing that is very, very important is just look out for this week. Just look out for buys. Okay, look out for buys. Uh, so let's go far back and do a replay. So what you guys don't know, replay is just like we checking back far back in price, and then we reacting to price based off of our strategy. So what I'm just going to do here on trading, I'm going to click on this replay, and then this will let me to know whether or not if my strategy is still very efficient in the current market. So I will not be going too far. I want something that will be very relevant to the current market, and then I'll be reacting to these prices as though they were live. As it is the exact same way I would have traded them with my strategy. So that's all I'm just going to be doing. So with these dates that are in on to the date I took it to is 27th of February 2023. Let's get started from here. So if this was the current market condition, how would I have attacked this price? What would I have done? And so on and so forth. Here, I think we can increase the price. Okay, this $1,000. Let's make this as though we are trading $20,000, which is an account I always love to trade 20K. And then we're just going to be putting a lot sizes and be trading it as though it is life. Exactly. All right. I'm sure you guys are ready to do this with me. So all I'm just going to be doing is just pure price action. Pure price action. These are basic things that you should know as a forex trader. So that's why I'm not going to be putting too much. One thing about trading is once you have three sure conferences, three good conferences, you are good to go. And that's what I'm about to explain to you. Three good conferences. And if you can use these three good conferences, each time you see these three good conferences, you short or you long or based on what it's telling you. By just merely looking at the charts, looking at this pattern, this is telling us to short. Why? We just recently broke off of this point. We just broke off of this point. By just recently looking at this. There are times that I might not send signals. Yeah, it's not because I'm not seeing opportunity. But I feel that you guys might not be able to take the time. There are different techniques to sending signal. There are some signals that you probably be saying that it will backfire on you. Not that you didn't make profit, but people will be losing money because of how fast paced it might be. All right, how fast paced it might be too fast for your audience to follow through. So to me, whenever I'm advising people that own an academy, I always tell them don't send those kind of signals. All right, do not send those kind of signals because you might just get your reputation ruined. Like for me, this signal is a very good sell opportunity that would have gotten it here. So let me do other conferences. Why exactly would I be wanting to go short on the signal? All right. So let's do psychological levels, which is the thing that I love to do. I double tap, then I want to round it up to 1.19500 at the psychological level. And the next one is just going to be 50 people ahead of it, 50 people above rather, which is going to be 1.200. All right. And then the next one that's going to come ahead is 1.205, going up 50 people above again, 0.205, like that. So I don't want to add too much. So anytime price gets to any of our relevant point, just add one more so that we don't have this line scattered all across our chart. We just want to add a something that's relevant right now. So for me, this would have been a very nice entry. Not just that the trend line broke, we tested one, two, there is a confluence there of a psychological level. Confluence simply means when two or three things, two or more things are telling you to actually take action, to either buy or to sell, to either buy or to sell. All right. So now that price is getting close to this bottom, you have to be wary. Why? We've been in a downtrend, it's been dropping more than how many touches now? And that concept that you guys also have to understand. I'm not supposed to be talking too much in this class. I'm just supposed to take trade and why you guys follow, and then I take questions in the comment section. That's what I'm supposed to do. But let me just lay the foundation so that you guys will not be, like, how did this come about? How did this come about? So now let's take this trend line. This is my first high, and then this is the second high that is touching. So hence, this is got to be a value trend line, right? All right. So another one again, we have another trend line inside of these again. We have another trend line here, touching here. All right. So we've been an uptrend coming through. If I'm to shrink my chart, you notice that we've been an uptrend coming through. So that tells you that you have to be wary of a recent low. Now, whenever you're about to take this trade, you don't want to go too much. Here's the price got here before, there was a reversal. Price got to this bottom before, there was a reversal. So this is another point I might come to. So to me, I would like to short this market to either get somewhere around this cycle level or maybe almost equal to this low. Then I will exit. Level structure never lies. All right. Structure will always tell you what to do all the time. Always look at structures. Structure. Okay. So let's go ahead and test. It's okay. It's enough. So I'm just gonna come here, take my short icon, and then I'm just gonna go short on this, for example. Then I'm gonna do my TP to be here. I love my TP. That is whenever I'm risking whenever I'm risking 2 pips, I should target at least 4 pips. All right. So 4 pips. So since price has already gone past here, I feel price might not come here again. I just have to do is just to target maybe a little bit below this recent low. I know price can just wake off that 1 to 2. So let's get started. Let's go. How do I adjust this top? Nah, not the whole 200. Okay. Okay, let's pass this one and I'll do the replay on the second one. I'll put the price. Yes, as price pushed up right there, I'm supposed to have gotten in for an entry. All right, I'm supposed to have gotten for an entry, and then I'll be out by now. I've been out. Okay, good. I've been out on this one. Right. So now it's like price is changing, the direction is changing. Another thing is Whenever price break out of trend line and it has done double top like this, such as this, and it's breaking up, forming this conjunction, to me, this would be another point of entry for me for a buy. Just listen. Everything has got a reason. Everything has got a reason why you should be getting in at each point. For like this is if you are using an indicator, this will show you a divergence. What's the divergence? Divergence is when what the indicator is saying is very different from what the chart price is saying. So what does that gives like an inverse reverse effect. So if you were selling before, you had better start buying. So to me, this is what I would have loved to use here as a buy entry. Long right now, long. So for those of you that don't know, long is synonymous to buy. So I'm gonna make my stop a little bit below this low. No, I talked about stop last week. Then I'm gonna put my profit to be 50 pips. I don't want too much. 50 pips mark. So I'll always have to make sure that my risk to reward is two. That is, if I'm risking 1 pip, I have to be targeting 2 pips. If I'm risking 2 pips, I have to target 4. That's 1 to 2 risk to reward. So let's just go ahead and click on sell. I don't know why this thing keeps quoting me there. Keeps quoting me where I don't want to. But let's just use this as an example. Okay, let's go. Okay, price already moving in that direction. So from here, the price got to, since price has gotten to this extent, you know what I'm going to do? I'll just go ahead and add more position. I'll go ahead and add more position. This is high trade. I'll go ahead and add more position. So each time I have my first entry here, say for example, I'm risking every day, my every day, I always love to risk $3,000 every day. I love to risk $3,000. So, for example, on this my first trade, I probably might just be risking $500. So, anytime I see a pullback and I see that we're still going a very long way, all right, I'm gonna add risk extra $500 times two. Say, for example, I was using I'm not this thing is not real, so I'm not gonna be using this buy or sell stuff again. Did I just click sell? No, it's a buy. I mean, it's supposed to be a buy. It's supposed to read buy, all right? So it will keep going up, keep going up. Anytime I have a drop down, a bid, I'm going to click enter and buy. Like here again, I should do another buy. I'm going to enter buy. So the lot size I'm going to be using here should be times 2 of what I did at this bottom. Times 2. So if I'm using one standard lot size at this bottom, so now I should be using times 2, times 2, times 2. And when I get to the top, I should be using one standard again, one standard again. The idea is at this bottom, I want to be very conservative because I'm not sure. In as much as I have 1,001 reason why you should buy, I still can be wrong. There are some tiny little chances that I might be wrong, or some percentage that I might be wrong, right? And now that it's already going in my favor, I think it's time. I'm sure of the move. Then it's time for me to double down and use the profit that I have from the bottom to make more profit. I believe that makes sense. So now let's keep going. I still would keep holding. Okay. Yes, yes. Now that price got here, it is doing this kind of thing. I'll get in more position. More position. Buy again. Buy again. Counter buy twice. I should be able to buy twice. Oh, I've overpressed the buy. But just know that that's like about 3 to 4 entry. Don't mind this one. I don't know how. Maybe I'll just stop pressing this buy thing. So price keep going up. Boom. Upon seeing this weak rejection, I'm already skeptical. I think I would have exited. I would exit upon seeing this thing. Yes, seeing this weak rejection, I would exit. This is my exit. So this one is already bagged. I'll exit upon seeing those weak rejections since I'm stacked. But price still moved up. But however, greed would not kill me. I would never want to do that. I would have already exited. I'll walk away with my money. And I think since I'm risking 10% per trade, what is this for? Nah, I think trading view didn't do good work here. I would have just done a better. Sorry, excuse me. I would have exited here. So that's 2 trades that we've won so far. And then on this day, it's that was on a Friday or Monday. Monday. It's just based on price action, not based on my own rule. I'm just teaching you pure price action. How it works. Pure price action. Without looking on Monday, whenever you look at the chart, I think everybody should be getting what I've explained so far. But this trading view stuff is really messing on my channel. trying to eliminate this, but it's not working. So I'm sure you guys are following along. Let me see the comment section. If you have any question regarding the last trade we just took, just ask question right now. Go ahead and ask. Go ahead and ask. If you've got any question regarding this live trade I just took, uh, okay, powerful. Time frame. The time frame I'm doing this from is on 15 minutes time frame. 15. 15. All right, thanks. And then the question, which pairs? This is on GBP USD. Are we using indices or currency pairs? We are using currency pairs. GBP USD, that is a currency pair. All right, so let's go. Let's go. Other stuff. How do you know it's going to buy? I need more explanation on that. Okay, good question. Do you break the high of the week? Do you still use TDI confirmation? How do you know it's going to buy? Okay, yeah. So let's take this question now. Okay, this is from Glorious. So let's take Glorious question. Let's go back to the chart. And then we'll answer that. So he's asking, how did I know it was going to buy from here? Pretty simple. Already, and again, there's something that you guys are not seeing yet. Let me introduce that. As this price is already started progressing up, I'm already seeing a trend line. Trend line, what's trend line? Trend line is when you have at least two troughs of two bottoms, two notable troughs on bottom, like this. This is another trend line coming here. So if I put this trend line earlier, I probably would have seen this trade opportunity during time of, this was New York on London on Monday. This was the New York section. Why this is London? So you guys would have been able to spot this. But here's another trend line again. It's just saying. So there's something that you guys don't understand about trend line. Trend line tells you a lot of detail. If you really understand how trend line works, you might not really need moving average, and you might not as well need divergence to say, because it's all in one. If you actually understand how these diagonal lines, which is trend line, works. Because with this thing, if you're able to spot overextension with trend line, most of the time, whenever trend line breaks, there's always time that it come back to retest. After a retest, then there's usually a drop or an up move in terms of an uptrend. So now we've had a break, came back to retest, and then boom, it's dropping. All right. So after that retest, any move that there comes back to touch this trend line again, just know that chances are high, and there's accumulation on top of it. Chances will be very high that it will break, and then trend is reversing to your upside. So that was what happened. Immediately I saw this, it tested this trend line, upper trend line. After testing here, came back here, tested this trend line again. Now that it's testing at 1.19500, then all I just have to do is to position at this point, wait for price to go up, and then I load it in with all my risk, about $3,000. So $3,000 will give me $6,000 in return on investment. You know, how many minutes? Let's say from here, I hope that's somewhere around here, right? So in about my $3,000, I should be making cool cash of, say, that's 39 pips. That should be way more than $6,000 in investment. So if you are putting $200 time, if you're risking $200, then you should be making, say, 400 or 450 US dollars. If you're risking $100, you should be making 200, 250 or 225 US dollars thereabout. Uh all right. So I'm sure that question is already answered. Do you lock in your new added position with stop loss? Yes, I put stop loss too. To the recent low, I put stop. Can I backtest using my Android phone? Yes, you can backtest with any device, as long as you've got an internet connection. Oh, Rosalind Uchena said, I just lost $7. My lead to $20 account. I was selling. You shouldn't be selling GBP because we are in an aggressive uptrend. It's very aggressive. I mean, the trend is very aggressive on GBP right? You don't want to be selling right now. It's very aggressive. It's aggressively bullish. Aggressively bullish. Sir Jeff, please, your screen is very blurry. Now, what you have to do for those who are getting blurry screen, is you have to go to your settings on YouTube and change the resolution to a very high one. Yes, that might consume more of your data. I mean, it's worth it. Or you might as well just come back later to watch the replay to get the actual detail. But right now, just follow us. Okay, now let's go back to the chart. I see more questions that come in regarding the price action. How was I able to know this was going to buy? How was I able to know that it was changing trend? Blah 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 blah. So, well, for us to avoid this mess of these numbers all across our chart, we're not going to be using this long and short functionality anymore. So you can see with this, it's actually a good thing because it's calculating the profit we would have made risking this amount. So it's saying that would have made 593 USD by now, but we're not going to be using that again so you guys can see clearly. And this is on Monday. Let me talk about one functionality so we'll be able to tell what day of the week we are in. Session breaks. So we're still on Monday. This is on Monday. And usually I only trade two entries, only two entries that I look to catch. London, London entry and New York entry. That's all. London entry and New York entry. So let's keep going. Let's play. So wow. This is showing that there's more bullish strength in this market, more bullish strength. So all I just have to do right now here is to just extend this lower trend line to the upside. All right. Let's see what's gonna happen. Then this trend line is coming from the top where trend line that I put a while ago. But with this behavior, if not that it was this Asian session at night, I would have long this market. I'd have going for a long based on price action. Anytime that I see price rejecting this way and we are having more buyers, sellers, and it's giving a pattern that is ascending. This is consolidating, but then it's still consolidating, tilting towards the upside. That shows there is a very high bullish um, presence in the forex market. So what would you do? It's a very good time for you to just keep holding your position to the other side. But it's Asian session, so I wouldn't trade. I'll wait for the break of London session, New York session. Of course, London is the biggest market in the whole world, so that's when you want to be trading. All right. So our trend line is broken. Another opportunity for us to go short, but then I'm not going to be going short until London. So London kicks in at this point. This is 6 o'clock. 6 o'clock, 6:15. So let's start looking for opportunity. Remember, we've got a trend line that's coming from this top right. Yeah, we might just have a retest on this because the main trend tool is still to the upside. So what would back this my decision would be if price touch this trend line and forms a W, then I'm going to go long. All right. But let's see. This is 6:15, 6:30. And this psychological level is going to serve as another confluence. All right. Psychological level will serve as another confluence. Let's zoom in so we can see. Because the sell candles are very sickly. They're not as healthy as the buy candles. So that's why my opinion is still tilted towards the yeah. As this flashes up, that's a good candle that there's a buy presence. I just want more flash to the downside. Whoop. Unfortunately, price is going to the upside. Yeah. So this happens. Let's see if there will be another bearish candle. Good. So now, for me, this is the first leg. Second leg is for me to go long, right? Good. Good. So as price has done this, I might as well just go long right now. I'll just go long right here. Mainly price is doing this touch. It's touching here. I feel price might not get to this low anymore. Let's get it long. So with this trade, is 1 to 3 risk to reward because I would love to risk because I'm catching it really early. It's like the kind of trades that I used to flip an account that can make you from being that can turn you from being broke to being a millionaire. And these are the type of trade opportunity. So let's go. Okay. Another entry. As this happens again, I'll do another entry, one more entry here again. I think I'll buy it. This is my 2 entry. Why am I buying again when market is going against me? Because I feel this is the bottom because I've had a is a first leg right here, a second leg right here. And it is better when the second leg is lower than the first leg because these are like an over extension. Usually price is supposed to even reverse somewhere around here, but now it's not even doing overextension. So that's a good news. Like it's a very discounted price for us to hop on. So that's why I'll be hopping on again and again. So let's play one more time. Whoop, stop loss taking. Then when this happen again, I would go in again. I'm still gonna go in again. After my stop loss I've taken, I'm gonna reposition, go in again because I'm very confident of this move. So once now it's not in my favor. I lost one. You guys just said I lost that first one. I lost two entries. Now as I've gotten in right here, I'm gonna pump it now. I'm going to pump in right here, pumping like ta 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 ta, lots of stacks. So I'm going to get in another position now that I see a very strong healthy candle in my direction. Boom. So as this guy pulled down here, another entry for me. I'm going to get in some more new entries right here. Yeah, some new entries right here. I'll get in another new entry right here. Even now this guy just closed above here, I'm still gonna get in. Sorry, I call candles guys. So if this as this candle just closed above, another entry again. Two standards, two standards, two standards, two standards, two standards, like that. So let's go. And then all of them, they're just going to maintain the same stop. They're all just going to maintain the same stop. Say for example, my first entry now becomes here, right? Then my SL is just going to be about here, a little bit below this recent low, because I feel this is the most recent low. All right. And then as price keep moving up, if I have the new entry here, the stop loss of this new entry is also going to be at the same spot here. So that would be times 2 XL. All right. Times 2. And then this other one, the stop loss is also going to be here. Then when this candle closes, I should break even for these other entries. Maybe I might just move this stop loss in a little bit in profit to this point. All right. So if it's a little bit in profit, then this stop loss, this new entry I'm going to enter, the stop loss is also going to be here, this long one. So these two have a tighter stop now, and this have a usual stop, and this one that I enter first is at break even. That's how it just keeps scaling. So now that price already moving in our direction, you don't just feel so relaxed and be so excited. If I want price moving this way, be very wary because anything can happen next. Okay, but our take profits already taken out, so we are not scared. But price keep moving up. Wow, keeps moving up, and I think it's retracing. So all this whole move might just get retraced. We don't know. So let's see what happens next. But however, I'll just be monitoring for London, New York. I'd love to catch new two sessions since I've caught my London, so the next one should be New York. So in order for me to effectively catch this other one, I have to put my psychological level for the upper one should be. The last one is 1.205, the next one should be 1.210. 1.210. Perfect. So price is currently at the psychological level. For some reason, when I connect to my Wi-Fi, my tested. This trend line here has to be tested. So let's keep going. So let's delete this one. What just happened? Are you guys still there? Are you guys still there? All right. So I see people are still here. So yeah, you can use phone to analyze, but it's not as effective as using the laptop though. Laptop is still the best in analyzing. Talking about analysis. All right. So as price gets here, we are watching out for this is just about 11 a.m. I'm not gonna get in. I looked forward to getting in again during New York session. New York session is about 1 p.m. Yeah, we are close. This is 1 p.m. now. Wow. Should he sell or what is he trying to do? Oh, there's still more buy power in the market, buy pressure. But let's see if we can get another entry with this one. We can't sell with this because it's trying to form an M. But to me, this is not an M still. Since this trend line has not been touched. So we still have more chance of still going to the upside, still hitting to the upside. So what I would rather like to do at this point is maybe allow price to drop a little. If price drops a little, I'll buy. But I can't sell, not at this region. I won't want to sell because there are more buyers right now. These are the type of trader blows account. You see, keeps buying, keeps buying, keeps buying. Yeah, as this candle drops a little, that'll be my entry for a buy. That'll be my entry for a buy. Price keeps going up. Boom, 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 boom. That'll be my entry for a buy. Then that's already out. Then from here, price starts dropping. So I don't think this overextension, maybe as price has hit this one and then start overextending. Maybe I couldn't have, there's no way I would have caught this sell. Then we enter another day again. So once it's 6 o'clock London, then we start shooting again for either a buy or a sell. Let's see. This is 3 a.m. 3 a.m. So let's keep going. Once it is 6, okay, this is 7:45, 6. Okay, good. So now that price has gotten here, what's the next analysis? So at this time, this trend line has done its most work. I can see head and shoulder forming already. Head and shoulder about to form. This is the shoulder, and this is the head. So we're expecting another maybe shoulder somewhere around here. And then you know what head and shoulder means? It means like a drop. A drop. So now that price has gotten here, we're looking for a drop. By all means, we start looking for a drop. So, but however, we still got a relevant trend line. We've got a trough. We've got a trough right here too. But I don't think price will. If price gets here, then this head and shoulder will be vitiated. But I don't think price is going to get there. But let's see. Anytime we see an M, we look forward to short. That is what we are concerned about. Anytime we see an M right now, yeah, we look forward to short. But just know that it's looking like head and shoulder. Wow. Since it's London, in order for us to make money from this London session, it's already 8, 7, 8. I will look forward to long. But you have to be very skeptical with this long because for me, since I must trade in the London session, because London is the biggest, obviously, so I would want to catch my piece of cake, maybe to the psychological level. But if it's not up to that place, I'll just accept my fate and walk away. So I'll buy here. I love London market. I feel used when I don't trade the London market. I don't know. Wow, rejection. And it went back up again. I'm gonna add new position again. I'll add new position somewhere around here. Let's see. But I'm very skeptical about adding price here. So now I think there's enough pressure. Let's do one more candle. I would have exited somewhere around there. I would have exited right now. I'll exit. That's enough for the buy because this market is not comfortable buying. Let's see. Anytime it does an M. Now, this is a sign. There's a push up. If you're using the TDI indicator or any other indicator you have showed, like there is a divergence. Let's see if another bearish candle drops. Okay. Now that price is trying to push up. Yeah, I will sell here. I'll sell at this top. Why would I have sold here? I'll sell right here. I love it when price has tested the zone and it goes back again to test it. But the only problem I have now, it has not tested my psychological level. So let's say this would be my first entry. So if there's any need for price to go back to touch my psychological level, then I agree to be wrong. Then I'll lose this one comfortably. This is me actually telling you how I trade. I'm willing to let some go and make huge return instead of losing everything in the long run. So I'll just want to risk this one. So for me, I'll get in for a sell here, and then let's see. I might lose this one. I'm not sure. So the candle is never moving well. Boom. Rejection. So with this, probably would have exited and wait for a new position. But I'm sure of a sell. Wow. Sell candle right there. Price start selling. Then we've done this one. But this is not so sure. It's not so sure on. I only use chart pattern and based off the level he has gotten to. I'm using what's it called, head and shoulder pattern. So since this head and shoulder pattern is working, then this whole move is going to be reversed, maybe somewhere around this low to this previous low. That's what we'll be anticipating. So this will inform my decision for both New York and London sessions. So, maybe around this low, around this low. So I'll be expecting price to come to this low. So anytime that price, anything happens, I'll be looking forward to short. Now it is safe for me to now put out a trend line again to this point. This is a high, this is a high. It's just something that the more you spend time on the chart, you just know that okay, these are just normal things. You just keep seeing these things every now and then. So this is London. Oh, this would have been New York. So I missed this New York move because I didn't put the trend line in time. But with the help of the trend line, you still would have been able to catch this drop. Price should still keep going down, in my opinion, right? Keep going down. I'm gonna keep dropping. It's not getting there. Okay, this is Asian session again. So we queued the Wednesday market. Let's see. Okay, this is 6 o'clock again. 6 o'clock my time. Because I'm using UTC plus one. That's the same equivalent as GMT plus one. So it's time for me to elongate my trend line to make sure it touches 1, 2, 3. Pam. So for me, there are more of sellers right now. So what I just keep doing is I wait for price to flash up to touch this trend line and I'll short. Simple. Wait for price to flash up to this trend line, then I'll short. So say somewhere around something like this. Let's see. So trend line will be confirming it. Psychological level will be confirming it, but let's see. To short. Price to keep going up. Okay, now. Yeah. But not so soon. I want another candle to go back up again. I'd have loved to short here. This is my short entry. Short entry. Now, why did I put that short box? Why did I put that box there? Because there's a anytime price come back there, trend line is gonna likely respect the trend line. Trend line is telling us to short, and then psychological level is also telling us to short. So that's why. Okay, so let's exit this one. Let's say we didn't catch that one, but then we saw the analysis coming, but we didn't catch it. Now price has come back to the low again. Always respect the previous low that has been tested. Remember this low has always been tested. So these points we have to be wary. Price might move to the upside, or if it busts it, we are going to keep tanking for a long time. But most like, oh, this happened, it's going to move to the upside. This is happening. Why? Each time price moves up and then we have a candle that comes down immediately to counter it, then we should be looking out for up move soon. Okay. Would I consider this as entry now? Now this is an entry that I would likely want to do. Is what time is this? It's about 16 o'clock. I would love to buy here. Just for the fun of it. My stop loss should be recent low. I'm expecting price to move up from here a bit. So then again, this stop loss is so tight, it's 13 pips. So I might lose this one, but I'm good. Boom. So I'm sure of up move. Up move. This buy move is not settled yet. Let's see. It's about to take stop. Wow. It flashes up. Then this is like a W, a proper W. Now let's see what happens. Now this is too much emotion. I would have exited here. Too much emotion. I will exit with small profit that I've got. And then let the market. Okay, that's a close of the market because I don't like to keep my market to the next day. So this is Asian again. Let's go to 6 o'clock. What day of the week is this? This is Thursday. And this will be Friday. This will be the last one I'm going to be doing today. Then I'll just take random questions, and that'll be it. I think this should be 6 o'clock. Now we have a breakout of this session. So anything that happens here for me is going to be a buy. I will want price to come back here and then I'll long. I want price to come back here. Sometimes this type of market can just do by extension. But what price for us to make money in this London session? For us to make money in this London session, I think we have to sell again. But let's see how fast this can move. So this is 6:45. No, no, no. This is obviously a buy. But it will be at the middle of it. So no way. For me, I wouldn't have taken anything. Let's see. New York. Nah, I wouldn't have taken this trade. Since price didn't get here, I agreed to lose that one. I miss it. I didn't take the opportunity. Maybe that's a gap. What happened there? Between 3:45 to 6 and 4 o'clock, 4 p.m. Maybe there was a nose and that's why the gap happened, or maybe it's market are just doing this thing. So that would have been how I've traded that week. So one thing is crucial: know your levels, know the levels where you're getting in, know the levels where you're exiting, because it's very important. When does London session open Nigeria time? London session, we are currently an hour ahead of London right now. So their 8 a.m. should be our 9 p.m. But for me, I love to look at your volatility start coming in when it's at 6 o'clock, 6 o'clock our time. So what is overextension? Paul is asking. What is overextension? Overextension is a situation of the market where price is supposed to reverse, where price is supposed to turn according to our abnormal patterns. There's always a break and retest. So when you get to a point of retest and it's not dropping, it keeps moving up. That's overextension. So it's keep going past the threshold where it's supposed to drop. That's overextension. So are you the one I'm texting with on Facebook? I'm afraid to be scammed. Do not send money to anyone. I'm not on Facebook. That's a scammer, obviously. Don't do that. He's a scammer. Thank God you asked, and I saw that question. Please. There are many fake pages of me. I know it's not just me, it's just what is happening in this our space. Now, forex trading, anything in finance. So guys, beware on Instagram, on Telegram, on Facebook, anywhere, any social media, on TikTok. So anytime, how to spot this scammer is when the person start discussing, send me money, send me $200, send me $100. Just know that that's not me, because I don't need your money. I won't ask you for money. So I claim to be making money. So why ask you for money, anyways? So don't send money to anyone. If you do that, then you are the one at fault, because I've warned you. Do not send money to anyone. Even somebody saying, "Oh, we've got an investment that can make your $100 to be $12,000 overnight daily," and then you believe that kind of shady thing. Nah, you are the real scam if you believe, because that's obviously not it. It's not possible. Then the Facebook, my team just reached out to me now. We currently have a Facebook page which is for FX Millionaire Expo. So we only use that page for promotion. So you won't see any of my team member chatting you. Nobody's going to chat you on Facebook. Nobody. I'm not on Facebook. Yes. Nathan is asking again. You are not on Facebook, sir. Yes, I'm not on Facebook. I'm not on Facebook. So don't do that. Don't do that. Don't send money to anyone. Don't send money to anyone. If you do that, you are doing that at your own risk. I am not on Facebook. I'm not on Facebook. Can't remember when last I opened my Facebook. It's already been ages. It's been ages. For social media platform, there are a lot to keep up. Uh, uh, Jeff, how can one effectively trade prop firm account? You can effectively trade prop firm account by honestly prop firm account an account to keep. Okay, prop firm account an account to keep for life. That's how I approach it. Some other people might have a different approach to it, but for me, I just look at it as risk to reward. Sometimes I can buy five already in my head. I'm expecting to lose three. Then if I'm able to catch one or to get two, then that's paying for all of the money that I invested in paying all of them, even with over profit times three profit. Say for example, I'm able to invest about $500 to buy $500 in five places, then I'm going to buy five different $100,000 account instead of just buying one stretch. So I'm going to buy five different $100,000 account. So give or take, I might lose three. It's fine, but I know I definitely will pass two. So that's 200K, and I'm going to trade them separately. I'm not going to do any measure. I'm not measuring anything. So I'm going to trade one very aggressively. I'm going to trade one conservatively. The aggressive one is to buy me a brand new car, and the conservative one is to put food on my table. Most of the time, I still end up losing the conservative one without making withdrawal. But you see, the aggressive one, once I do one aggressive flip on the account, I let it be. Then I'm waiting for the next 14 days for my payout. All right. So that's what I do with prop firms. And however, there are even prop firms now that is actually giving a very good drawdown. Let me show you something real quick, guys. Consummate trader is something that I've just been looking at for. I've been looking at for a while now. It's an amazing prop firm that I think you guys should use. They've got free trial. If you don't want to try their account right now, you can just test out their free trial and see if their service is something that you would like. So here's a very good thing that they have. They have evaluation. Evaluation is the one that has two-phase model of trial. Phase one, phase two. You have to pass phase one and phase two and you become funded. Express Light is where you have just one. You pass just phase one and you become funded. And Express Pro, you don't have any challenges to pass. Direct life funding. So on the evaluation one, the things that is mind blowing that is different from every other one is for your phase one, you're expected to meet 8% target, phase two, meet 5%. So for phase one, 60 days, as opposed to other people giving 30 days. Phase two target 5%, 60 days to leverage is 1 to 100. No minimum trading days. You can pass phase one today, pass phase two today, and become funded today at the same time. All right, so the max drawdown is 6%, total drawdown is 12%, and the profit split is from 80% to 90%. So 80% first month, 85% second month, and then 90% subsequently. And then you get to get 15% of evaluation fees. Your phase one, phase two, they get to pay you out 15% of each of those. And then you get your registration fee back. So this fee that you're using to purchase this account is refundable. It's only refundable when you pass. So this is just like a company that is saying, hey guys, we want to fund you, right? For you to prove that you can actually trade, pay this refundable fee. Then we are going to give you this money back on top of your first profit split when you pass. That's what it is. So for me, I'll just go ahead, take 100K account in five places. Then I might lose three, to be very real, because these challenges too sometimes they are not easy to pass. Making 8% with this daily drawdown, honestly, whether it's FTMO, my forex fund, any one of them, is same thing. Not easy to pass. So just give or take, you might lose three, but if you're able to catch one or two, you should be able to make your profit back and you break even massively and you make crazy profit. And then this is the Express Light, the same thing. Then the prices are a little bit different. And Express Pro, this one is direct funding. Direct funding. All right. So these are the accounts types. If you want to read more on this one, just use this link, right? Let me drop it. I think I've got a referral code with these guys. So just in case you want to use them and try them out. Let me drop that with you right now. So you want to use that code I just streamed. This is the code that is right now on your screen. You want to use it to go ahead and purchase. Or you could just go directly to the website, so any one of them that you're comfortable with. Because if you're using my link to purchase, I definitely will get a small referral code. But if you're not, a referral commission. But if you're not cool with that, you want to go ahead and just use our website directly. It's fine. It's a free word. Any one of them. All right. And also, you could also look around, check other prop firm that you're cool with. The one that you see that is offering more value to you and lesser price, that is giving you enough breathing space to actually make real money. So I've seen people cash out here. Check their, for those who are is asking for payout about these people, you can check on YouTube. People are actually making content about it. I think I should make a video about, I should make a breakdown of their rules and what you should be expecting, and any if there's any fishy thing, any shady things about any of these guys, so you can keep these guys accountable. All right, I'll be making videos about them too in no time. I think somewhere around this week I should make video about them. I'm getting random DMs. What's going on? This guy's cashing out again. All right, so that's it. I'll just make a video about that. Now, here's another important question. This is from Expert Reviews. It said, Mr. Jeff, can I rely on YouTube because I don't have money for courses? Yes, YouTube is a very great way to learn, most especially my YouTube channel, because I'm going to give you premium content here, even though it's free. All right, but the only difficulty with YouTube is the information is scattered. So this day you might see someone talking about topic that interests you. Then the next day is saying something that a topic that you have probably not even got into, you've not heard of it, and it's throwing you off balance. So if you can actually do an extra work, a little bit of work of putting this information together, you should be able to make profit in the long run. But it might not be as easy as someone who has a mentorship, who hopped on a mentorship and course. But that's the price you pay for wanting to learn on YouTube. It's just scattered. So what the help of course and mentorship is, you have someone you're always looking out to. You just want to replicate his success story. So whatever he has gotten, you also want to get the exact same thing. That's the essence of mentorship. So that's why we always advise you look out for somebody whom you best resonate with, your personality. You just take up what the person is doing, replicate, and then you trade it to. Then you'll be able to arrive at the same answer in no time. Mentorship just call the time, sure. But so if you've got enough time and you don't have money, go with free YouTube content. All right, so wow. The person on Facebook is running a self-trading program and it makes it to look so real. You upload stories and posts that look undoubtedly real, sir. So I am disturbed. That is not me, guy. Do not send him money. Self-trading program. I don't even do that. In order for you to compare whether or not it's a real account, check what I'm doing on Instagram and tally with whatever thing I'm doing on Instagram, whatever I'm doing, it has to tally what I'm doing on Instagram, what I'm doing on I'm also going to post on my TikTok. I'm also going to post it on my Telegram. But major place is my Telegram, YouTube, and Instagram. That's where I stay on. So I'm not on Facebook. So disregard anything. No matter how it makes it look so real, don't believe that dude. I'm not the one. I'm not on Facebook. It's not me. At least don't send, even if he claims that I'm the person, don't send him money. That should help you out. Don't send me money. Don't send him money. Don't send anybody money. We don't need your money. I think that should be just simple. Don't listen to anybody that's asking you to give them money to trade for you. I won't do that. All right. I don't do that. I have enough funds that I'm trading. Like, why would I want to ask you for money to trade? Now, Henry is asking Mr. Jeff, will you advise someone to register for a signal group in order to save up for the full knowledge in the academy? And also, what are the rules to stacking? I mean, what are the things to check out for? Okay, great question. For me, registering to a signal channel, if it's free, yeah, you can go on. But if it's paid one, I'm a little bit skeptical about that. But however, if you have the money and you trust the signal provider, you can go ahead and pay. To me, I don't really believe in signal services because it's not efficient. It's not sustainable. It's not a very good way to make money long term. All right. That's why I say I don't just believe in it. Anything that is not long term, I wouldn't want to do it. That's just me. And talking about what are the rules to stacking? Rules to stacking is simple. Do not have more position to the upside. Let's say, for example, you are buying, do not add more position, not until the previous one you're in on are protected. That's the key rule. That's the thing that you have to keep at heart. And number two, make sure you break even and move your stop loss to the same level in order to avoid confusion. Number three, whenever you are in, you are fully stacked on any trade, be wary, be scared. Be scared, yes. I mean be scared. Do not be greedy. Exit position whenever you see any tiny weak rejection, because if any trade pulls against you when you are fully stacked, it's gone. It's gone. So these are the things I just have to say that I can remember right now from my head. I can just say, do you plot your levels on the 15 minutes time frame? I do that on any time frame. The levels are the same anyway. So even if I put on 1 hour time frame, 4 hour, 15 minutes time, it's still the same. So you can do it on 15 minutes time frame to make any difference. Mr. Jeff, do you use psychological levels and trend lines? Yeah, that's what I use. Is it allowed to make is it allowed to make 100% of of your prop firm account equity. Yes, you can make 100% in as much as you don't violate 6% daily drawdown and 12% to the drawdown of the consummate prop firm. You can make any amount. For FTMO, 5% daily drawdown, 10% to drawdown. You can make any amount. In as much as you don't violate any of these key rules. For MFF, 6% daily drawdown, 10% to drawdown. You can make any amount. Is trading a long-term business? Yes, it is. It's been for me. I don't know what you mean by long-term. For me, I've been trading profitably for 7 years now, and I'm living off of trading. All right, trading. It's a long term. I've seen people. If it was not George Soros, won't be still be doing it. These are bigger guys. Paul Tudor Jones. This guy that did trading all through your life, Paul Tudor Jones. We also have JC Livermore. These great guys, Bill Eckhart, Williams, um, a lot of these guys. So it's a long time game. Some people are asking me questions regarding strategy that is not even mine. Do you use ICT strategy? No, I don't use any ICT strategy. And anything I don't see that I talk about here, I don't use them at all. I don't use them. So I only talk about things that I use. All right. There are lots of strategies. So the fact that you're using that doesn't mean that you're not going to make profit. You still might make profit. All right. But just find something that has an edge. So please, can you explain what the 6% daily drawdown is? In a day, you must not lose 6%. Take, for example, you're trading an account of $100,000. In a day, you shouldn't lose $6,000 in a day, in a single day. So you can lose 2,000, 3,000, $5,000, but don't allow it to get to $6,000 on your equity. Say, for example, you place trade and the trade went negative $6,000, and then you now later come back down again in profit, and then you made $10,000. You already violated the rule. So at any point in time, do not allow your equity to get to negative 6,000 of that day. You understand? So that's how that works. That's meaning of daily drawdown. Differentiate between trading and investing. I mean, yeah, it's not too much different. So traders are also investors, all right? So investing, there are two types, there's two types. So for someone who is trading, an investor can actually be a trader, or a trader can actually be an investor. An investor is not necessarily a trader. Okay, so investor is someone who finds value in a particular asset or someone in a particular thing, and then he puts money in hopes that price goes up. He buys low in hope that price goes up, and then he sell off and make profit. That's the intention of an investor. That's investing. All right. But however, it's high risk. It's highly risky, and sometimes you might also make some losses there away. But trading is an act of constantly trading, buying and selling in order to as well make profit. So it's not necessarily traders would ideally not just look for most of the time traders are always specialized, but investors they don't care. Investors are actually looking for anything that would actually appreciate in value, but usually something that they have knowledge, a little bit of knowledge about. All right, they always want to invest in it in hopes that it moves up in price, in value, and then they sell off. Okay. Um, all right, so that'll be it for today, guys. People asking me what broker do I use, then I'll definitely make a video regarding that soon. Any broker you see I'm trading with, that's what I'm using. When is the big announcement coming? It's coming really soon. Coming pretty soon. Is forex trading a gambling? Good question. It's not. Since it has got analysis, a proper analysis, and it's a professional, I don't think it's gambling. And since central banks of each country's Federal Reserve is trading it, Bank of England, all this, even my country's central bank is trading. I don't think it's gambling. I don't think. And it has got a proper analysis to predict, and it's a profession, so it's not gambling. But it's tiny. It's a thin line between trading and gambling. I'm not even gonna lie, because everything is it's all about chances. So that you have to learn how to take chances of any opportunity you get. So yeah, good. I forgot to mention my bias for today. Thank you for reminding me. So what is my bias trading? What is a bias in trading? Oh, that's not even the question, but anyway, you still reminded me. Bias simply means what are you looking forward to do in long run? What is your position? Are you looking to short or are you looking to buy? So let's go ahead and let me talk about the buyers for today. For those that want to catch the live signal, is a buy. So anytime you see weak rejection like this one, there might be a slight pullback, and then you hop on. Trust me, this is a buy because there are most buyers in the forex market right now as we speak. So anytime any slight retracement, buy, and somewhere around here. So we have our high and low of the week right here. So in case you want to understand how this concept works, I'm about to list out now. Just go watch my video. Just take any of my video and you watch regarding my strategy. Then you have a full understanding of how this works. So for me, buy for this week. Buys. But each time price retrace to this point, I look forward to going long. I don't know the stop loss. So whenever market comes to this point, it's going to give us a point of stop. All right. Then my take profit will be the next cycle. That's how I will trade it. So my bias is long. All right. Thank you. So that'll be all for today. I'm sure you guys got value. Bye for now. I'll answer your other questions next week, Monday, same time, same place on YouTube here. Please kindly subscribe if you're not yet subscribed, and please kindly give us this video a thumbs up so that this video can be recommended to as many other people that will be interested. So bye guys. Keep it fire people.